hope everybody is doing well. This is Derek from TradeTechnicals.blogspot. And in this video today, I'm going to be talking about the job losses that happened today, as there was 539,000 of them. I'm going to be talking about the stock market a little bit. I'm going to talk about my new ebook that is coming out, and I gotta talk a little bit about Jim Cramer. That will be on the agenda for this video here. So thank you all for watching. First off, I got this hat. I hope you guys like it. It is a Canada hat. This is where I'm from, of course, and this hat cost me $1. This cost me $1, brand new. I bought this at a dollar store. I bought 3 of them actually. I only bought 3 because I want to see the durability of this hat over a period of time. I normally don't wear them, but when you see deals like this, you change, say you buy 20 of these for $20. You have an asset. You put this in a box somewhere, a couple years, 3 years down the line, people are still going to be wearing hats. You can trade these for other assets. You will keep your value. It's not hard to get out of the dollar. This is one small way of doing it. So anyway, where I am going with this is the job losses. 539,000 job losses. And they say that the pace of the layoffs were slowed in April, and they expected 620,000. Back in March, there was 669,000 job losses, 681,000 in February, and 741,000 in January. So it was a lower number, and they expected 620. So the markets went up right at the start of the day and then sold off a little bit. And it was better than expected, as they said. But this is into spring now, April, May. This is when jobs historically go a lot higher. There is 2 periods of times when jobs go higher. One is right before Christmas, November and December. Just a small seasonal part of work for the Christmas season, and then the layoffs are always January. And like I said, there was 741,000 January layoffs, and less since then. That's because that's normal with Christmas. But there is more of a seasonal boost when the spring and summer comes. So this is generally, historically speaking, when there's always more jobs being added. So even though they say, oh, it's an improvement that only 539,000 jobs were lost, I don't really think that it is, because this is where we're supposed to have more jobs. And yes, it's non-farm payroll, I'll give you that, yes. But there's so many miscellaneous businesses that are needed for summer jobs that come along this time, which means that when we get into the October, November numbers, these job losses most likely are going to get a lot higher, because these people who've been getting these seasonal jobs are going to lose it, and that's just the period of time in which this happens. So I look at these extra these job losses as an improvement. No, I see it as this is a time where normally there is more jobs in the market. So we've seen the stock market now go up a little bit today because of it, but not only a little bit, but we've seen the stock market go extremely high. We've had Don Harold come in and say that it's time to short the market. Folks, there is many great ways to make money during what would be a bear run, or if even your whole portfolio, protecting your 401k. This ebook that I have created, or on the process of creating now anyway, which I plan to have out on Saturday, is to help yourself find ways with many great strategies, especially using option trading, to be able to play this game as far as shorting the market, protecting your 401k plans. There'll be a video on Saturday on the blog, so that will explain a lot more about it. But just different ways to protect your portfolio, protect yourself from a stock market crash, profit from a stock market crash. Whichever strategy you are looking for, the ebook will contain it for you. Okay, so like I said, now I want to talk a little bit about Jim Cramer, because I made a video recently about what should I do with my 401k plan. And the reason why, of course, is to help people understand that the mainstream media isn't always in your best interest. And I've looked at this little video. This is from Jim Cramer from November the 10th on Mad Money. The link to this video will be in the more info. I will put the audio for this video on momentarily. And basically he's talking about keeping GM alive. And well, you know what? I'll put the audio on right now.
Until then, unless you want an unlimited bear market like the one today where we open up 200 and then nosedive 273 points, the $500 billion Chinese stimulus package that pushed up the world's bourses will not help. You want GM alive, even if not well. And you want some of those 70,000 dollar jobs, like we're guaranteeing to the bankers who make $70 million to stay. I think Obama understands this. I think his team understands it, saying the autos need a bailout because Obama's opinion actually now counts. Unlike the opinions of the guys who caused trillions in losses and now blame those nasty, lazy auto workers for not being able to work because, well, I mean, they're a bunch of jokers. Bottom line, if you're rooting for GM or the others to fail, like so many of my buddies, okay, many of my rich East Coast types I heard this weekend, then you're rooting for a bear market and an economy with double-digit unemployment. You may think you're rooting against the unions and labor royalty, but you're really just fighting against your own 401k.
What can I say? What can I say? So that was Jim Cramer from November the 10th of last season. And let me just comment a little more on this whole deal. Cramer said that you want to keep GM alive. You want these jobs to stay. So basically, he's telling you what you want. He's not letting you decide what it is you want for yourself. No, that's what I think a lot of what this mainstream wants to do is to plant ideas of what they want to tell you. And that's what he was telling you, what you want. Jim Cramer said what's going to happen if you're rooting for a bear market. He didn't tell you what would happen if you're rooting for a bull market, and I'm going to let you know what I think is happening if you root for either one or the other. And first off, unless you're a Warren Buffett or some sort of rich tycoon, meaning you have under $1 million of investment money, it doesn't matter if you're rooting for a bull market or a bear market. The money you put into the market is hardly going to change it anyway. So if you're rooting for a bear market and you're wrong, you're going to lose. If you're rooting for a bull market and you're wrong, you're going to lose. And if you're right, you're going to win. That's pretty much how the gambling game of stocks work. Something of which Jim Cramer hasn't talked about either. So in reality, like I'm saying, if you're rooting for a bear market, then you are, yes, it is correct. You are rooting for higher unemployment rates. Yes, you are. But if you're rooting for a bull market, you are rooting for hyperinflation, because right now that is the only way for there to be a bull market, because they are not telling us what happens when you create money, what that means. It's not like CNBC is going on talking about what it all means as far as how the dollar is back. There's a lot of information they don't want to tell you. And like they said before, am I rooting for unemployment? I am, because I'm rooting for a resource-based economy, and a resource-based economy needs a 60, 70, 80, 90% unemployment rate, because you don't need a monetary system. And when you don't need a monetary system, it makes it so much easier to be able to have these unemployment rates, because we have robots doing the work for us, and we have more people that are able to do more things towards the world, whatever that may happen to be. So it's not like Jim Cramer's coming on here talking about, well, there's a possibility that the market would fall. We had a head and shoulders pattern back last year in the summer before the October crash, when the Dow was still, even in the 12,000, 11,000 area, that we had a head and shoulders pattern on the long-term time frame, not the intermediate-term time frame, but the long-term time frame, which signified the Dow going to 8,000. It went to 8,000 in October. Webbot, in the spring of last year, said that the stock market could have a big crash in October, but you never ever did see Jim Cramer talking about how to protect your money from a stock market crash. Instead, he says stuff like,
But you're really just fighting against your own 401k.
Yeah, your 401k plan. You're just fighting your 401k plan. See, this is what I have been saying. CNBC, mainstream media, they're not going to tell you your best interest. No, because if it was in your best interest, they would have told you how to protect your butt from this crash. That is the unfortunate thing. My ebook that I have this weekend explains how to protect yourself from these crashes. So if you have a 401k plan, you will only lose so much money, or maybe you might even gain depending on how you do it yourself. This is something they do not do. They don't take these things seriously, and what can I say? I really don't see anything in the best interest for you. He's just, I mean...
But you're really just fighting against your own 401k.
Fighting your 401k plan. Instead, if he really wanted to help you, he would have told you how to fight your 401k plan, how to hedge your bet. So, yeah, anyway, check out the blog this weekend. If you watch this particular video a little bit later, it is a video response. So, thank you all for watching and have yourself a magnificent day. Bye-bye.
But you're really just fighting against your own 401k.